Okay, so that's what I'll tell him. I'll see. All right. Okay. Oh. Oh. Okay. Okay. All right. Does it look all right? Does it look handsome? Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Thank you for joining my podcast today. Now, if you've noticed yesterday, our podcast, instead of a half hour, we cut to 15 minutes. Because starting tomorrow, what we're going to do is the 15 minutes, and then we're going to go to Instagram where you can ask me a question about stocks. So we thought people would enjoy that this year, and hopefully you will. So I'll answer stock questions, okay, or any question, but stock questions. So if you have you're in a stock, you're curious about it, I'll talk about it for you. So, but make sure, okay, you get that typed in early, all right? Okay, so I will start my podcast with that information going. Okay, first of all, I get so tired of this. Earnings are terrific. Earnings are great. Always follow the money. Always follow the money. Stop listening to BS. Here's my point. Cut one.
Well, earnings have continued to surprise to the upside, and we've seen earnings continually get revised up, strong beats. So I think if you look at 2026 expectations for, call it 13% earnings growth, it's very possible that we see something closer to 14, 15% earnings growth.
Are you kidding? Hey, listen, when they keep talking about earnings and these earning beats, they're beating their estimates. That's what pushed stocks up, right? But beating estimates only means that the company, it did better than Wall Street expected. Now, how's that happen? Well, the CEO, the CFO, they'll drop the expectations way down, spoon feed it to the analysts, and then the day of the earnings, oh, wow, you beat. I didn't know that. But what's it really mean? Well, it's not that the business grew. When they say, oh, look at the stock, it's going up, we beat estimates by 2 cents. But it doesn't mean the company grew. Analysts predicted earnings, they'll say at $1 per share. But the company reports $1.05, we'll say, or $1.08. That's a beat. But it doesn't mean that profits are improving. Or it does. I mean, this is crazy, and they get so excited. So even if profits are down that year, they'll say, "Oh well, this is a beat." So they can say, "We beat expectations," but their profits are down, and they still can say that they beat, even though profits are down. Crazy. Now, a company can beat estimates over its revenue sharing, it can profits, revenue sharing, profits on, even, I could say even profits are falling, even if margins are deteriorating, even though business is slowing, they'll even say, boy, we beat, even the company was filing bankruptcy. So when they tell you, and they play that cut again.
Well, earnings have continued to surprise to the upside.
Go ahead.
Well, earnings have continued to surprise to the upside, and we've seen earnings continually get revised up, strong beats. So I think if you look at 2026 expectations.
Strong beats, you hear that? Strong beats, estimate beats. So a company would beating estimates, and they'll brag on it. Stock will go up even though revenues are shrinking, even though profits are shrinking, even though the guidance is weak. Remember, it's always about beating the estimates. Boy, that gets my goat. I mean, it's just unbelievable. Okay, so don't get excited when you hear that. It's unreal. I mean, can you imagine? She could say that about, boy, this company's up, it beat everything, and what a great company, bye, bye, bye. And guess what? The business is slowing. It's going downhill. Doesn't matter. So it's just like today. They were all excited today. The market went up for a couple of reasons. There's today because they're signing up, the people who are signing up for unemployment checks were down. Okay, so everyone's saying, wow. And then we had Taiwan Semi go up today. I'm going to talk about that in a minute. Wow, everything's great again, right? No more problems. Same thing happened when MU went up December 17th. So don't be fooled by this, because there's a reason gold is surging. Gold is going nuts. Gold is past 4,600, I believe. And why? Because there's a big demand for safety. People don't feel safe. There's so much economic uncertainty. But we don't care here at Phil's Gang, because we follow the money. Because we know how to go long, we know how to go short, it doesn't matter. We follow the money. But 93% of people don't short. So they lose money. I mean, isn't that terrible? That's crazy, isn't it? So everybody, I mean, the gold is going up because there's so much uncertainty. I mean, economic uncertainty. And then look what happened. We expected 215,000 jobs, right? And they came in at 198,000. Okay, all right, that's fine. We had in December a weak job number. They added 50,000, and they expected 70,000. We didn't get to 70,000. We got 50. So, I'm sorry. I think the unemployment people are going to sign up for unemployment checks. Okay, they expected 215,000. I think they got 198,000, something like that. But anyways, my point is, and personal bankruptcies are surging like crazy. They're surging. Small businesses, their bankruptcies are surging. Record household debt, 18.5 trillion. Remember what I told you the other day? You have the top 10%, and then you have the bottom 50%, okay? And then you have that 40% in the middle. The 40% in the middle, they're grabbing on straws. Those are the people we watch, because if there's going to be inflation, it's that group right there. The 50% of the people in the bottom are starving to death. The only people that are spending money is the top 10%. So when you hear how wonderful things are, I don't listen to it. I look at my stock. We're doing terrific with our stocks. We're in Micron Technology, all good tech stocks. I'm going to talk about that in a minute, too. You're being fooled about that. But we have weak jobs, okay? We have inflation. We didn't hit our target of 2%. And so this is why people are running into gold, okay? And they're worried about what's going on with the Fed. And that's a big worry, because if Trump puts somebody in there that he'll tell, look, don't worry, we'll always cut rates, okay? No matter what the economic data is, we'll just keep cutting because we want to keep pushing the stock market. That's still hanging around everyone's head. That's why gold's going up. All these things I'm telling you that they're worried about, that's why gold's going up. And the geopolitical tension's going up. And so, but what we saw, this is what I want to really get to the meat of today. What we saw December 17th, we saw again today. Now, remember, what we saw today, all of a sudden the market turned, it went right back up again, right? That's a classic Wall Street behavior. That's all it is, okay? And it's classic, man. And what do? Okay, so what they're doing is all they do is just take one big data point, like an earnings blowout, like they did with Micron Technology in December 17th. They'll take that one big data point and they blow everything up. Today we had that one big data point, another blowout. Taiwan Semi, and by the way, those are the two stocks that we're in. And as far as tech stocks, those are the only two stocks you should stay in. In fact, I did a short today telling people that, and that, and the one they should really stay in is Micron Technology. Now, so with all these big blowouts again today in the market rallies, it's masking temporarily, remember, okay, but not disposing of all the problems that we're having that's causing gold to go up. Now, after 18 months of breakneck speed to build these data centers, right? That's all you hear about, these data centers. CapEx spending for building these new data centers is going down. Nobody talks about it. Also, they're cutting back on buying new machinery. They're cutting back on new equipment. They're cutting back on upgrading their infrastructure. But nobody's talking about any of this. And so, and why? Because we have a problem. Chips are slowing, okay? Sales are slowing over the whole market. But you don't see that with TSM. You don't see that with Micron Technology. So everybody's just focused on that. But there's tariff uncertainty too, remember. We still we still don't know what's going on with that. In China, restricting the high-end importing of chips, that's bad. So here's the consequences. If you take the top 10 tech stocks and take the top chip makers and take the top 10 software, okay? Think about this. Here's the real world. 9 of the top 10 software stocks currently are in a 45 to 90 day downtrend. They've been stuck in a 45 to 90 day downtrend stock. So that's 9. Remember, 9 out of 10. Now that's software. That's software stock. So, and then if you go and take a look at your chip stocks, you got half of the 10 stuck in that downtrend. So let's say you got 20 top tech stocks. You only have a handful that are performing. Microsoft, you only got one that's doing, software, you only got Google that's doing well. So let's turn to my charts. I want to show you something. People don't look at this. Now, if you look at, like I said this morning, I said, look, if you're going to be in a stock, chip stock, here's Micron Technology. Look how that's doing. And yes, TSM, that's another stock we're in. That went up today. But if you look at this, you got just a handful, ASML, LRCX, and Intel. Those are all trending up. But look at this. NVIDIA has been trending down, especially if you take it back to 6 months. NVIDIA's down. Marvel's MRVL, that's down. All trending down. AMD is trending down. Qualcomm's trending down. Now go to our software. There's only one stock that's working. Google, trending up. Everything else is in a downtrend. Look at Meta, downtrend. I'm going to bring it back even 6 months. Look at this. Meta, CRM, PLTR, Adobe, CRWD, Microsoft, Intuit, Now, Hubs. So those 10 software stocks, go back 6 months, go back 3 months. They're on their way down. Look at the only stars are Micron and TSM. Those are the only ones you want to be in. Yes, ASML is doing good, but there's a lot of back and filling could happen with that. LRCX is good. That's a good stock, okay? And Intel, of course, is good, but the ones I'm staying with are Micron and TSM, ASML. Not ASML, LRCX, because those are the stocks that are carrying. I'm going back now. Those are the stocks that are carrying all of this. This is insane. This is insane. So this is why people get hurt. They think the whole market's doing wonderful, the tech, and when you go and check it out, it's not true. It's not true at all. So I hope that's helping you today and put some perspective on what's really going on. Remember, never mind all this nonsense. Follow the money. If money's going in, we buy. If money's going out, we sell short. Now, don't forget, tomorrow, after I'm done with my podcast, we're going to extend 15 minutes, okay, to Instagram, where I'll answer your stock questions, or whatever question you have, okay? So I hope you enjoyed this. So I'll see you back on my podcast. So remember, follow the money. Follow the money. See you in the charts.
Are you nuts?